Good morning, good afternoon, and good evening, everybody. Hey, welcome to Money Mondays. Hope you all are doing well. Hope you had a great weekend. It's an absolutely gorgeous day out here in Austin, Texas. And today's episode, I kind of want to go through some basics when it comes to, and I probably haven't covered this in a while, but I know when I run into the same questions from a few folks, I figured I'd need to do a podcast episode or do a video about it, a little quick training video about it. And this is not meant to be difficult. This is meant to be an educational aspect of what you're doing because especially if you're new to note investing, when you get a spreadsheet in, you get a list of notes in, we get a tape in, and you've looked at a few deals, you're like, okay, these look pretty decent. And like we did, was it 2 Mondays ago, we went through a tape of 300 notes. And I've gone through that tape a couple times with a couple one-on-one coaching students and a conversation today, especially during my morning walk about one specific asset. And I just want to go through what you need to do when you're submitting to the asset manager. Now, there's some basic questions you got to ask when you get a tape in. First question you got to ask is first and foremost, what's pricing expectations? They're probably going to come back highest and best. Okay. The second question is going to ask, when do I need to have bids in? Because if it's coming from like a trader, okay, a broker, they're probably going to leave bids out for a little while, a few days, so that they could collect bids in and pick the best offering. Now, what they're probably going to say is they need loan level pricing. Now, what does that mean? Well, when you get a tape of 300 notes in and you're going to make offers on 15, they don't want one bid for all 15. They want individual bids, so 15 individual bids. Now, what do? Well, obviously, on your spreadsheet, after you've sliced and diced and gotten rid of the states you don't want, the assets you don't want, you've calculated your ROI roughly, you're going to have a lot of information there kind of showing your numbers. Well, the easiest thing to do, but people just send in your spreadsheet. Well, don't do that. If there's 349 assets and you're making an offer on two, don't send the full spreadsheet in. Also, don't have anything filtered because if the asset manager gets it and you send it as a CSV file, they open it up. It may just be confusing as all get out. So what you want to do is obviously get rid of the stuff you're not making offers. Now, here's the caveat that sometimes the seller, depending on how many offers you make, they may want you to leave everything. I've had that happen to me before where we made an offer on 60 out of like 300. And the seller comes back and say, hey, can you just send in the original spreadsheet as it was? So it's easier for me to find them and then copy paste them over. Because basically what that tells me is that we submitted the most amount of offers. So they want to use my bid sheet that we submitted back to them as the basis to fill everybody else's in around us. That's a good thing, right? That's a really good thing. Most of the time, if you're not going to be bidding on like 20% of the tape, stuff like that, and I get that, that's normal. You're going to bid on 1, 2, 3, or 4 to get the ball rolling. Then what you do is you obviously delete off the assets you don't even want to make an offer on. So you're left with basically 3, 4, or 5 rows of whatever you're bidding on those individual 5 assets. Okay. And I'm talking deleting everything else off except those 5 lines with data. Now go back in there and anything that you've got your bid amount in, whatever you calculate, whether it's 80% of the legal balance or 70% or whatever number you ran into it, you want to copy that number over to the very first like column. Insert a column all the way to the far left. Insert a column there next to the loan number. Label it Don's bids or Anna's bids, okay? And then put your number in there, okay? Make sure it's not a formula it's copied over, but an actual number, copy paste data basically. And then to keep it simple, go back in and save that spreadsheet as your bids with all your numbers, bids with due diligence. Okay. So that if they counter back or accept your bids, you can know kind of the rough ROI. Save that as your bids. Now, what you want to do, this is not what you want to send in. Okay. Remember, Anna's bids with DD. DD stands due diligence. Okay. What you do next is then you go in and delete off anything that's showing your ROI. I mean, I would literally get rid of everything except your bid column, the loan number column, and then anything that's identifying like the address. So it's just, they know it's the right address you're making an offer on. So yeah, get rid of all the payment history, all that stuff. You don't really need that stuff. You just want a very clean spreadsheet that you're submitting in via bids. Okay. Even if you're doing just one, same thing, submitting a clean bid sheet. It's got, like I said, the bids on the far left side, the loan number. If they've inserted a column already in the spreadsheet where they want you to put your bids in, that's where you would put it. Okay. And then like I said, get rid of all the due diligence information that shows what kind of ROI you're bidding off. Because they look at that and they see high, they're just automatically probably going to delete it off or wait for a higher bid to come in. You don't need to make their job easier in figuring out what your ROI is. I had a few sellers that came in back, oh, you're making a 30% ROI on that. I'm like, yeah, it's a low balance asset. It's got a bunch of back taxes and a bunch of issues with it. Yes, I'm going to make a 30% ROI. So I just kind of get rid of that aspect of things. Now, of course, if it's one thing you might look at, if there is a bunch of equity above your assets, you might put the percentage of the legal balance column in there, especially if it's at 70, 80%. If it's in line with normal marketing prices of what's going on today, yeah, great. If it makes good for a good yield for you, great. Put that in there. Hey, we made our offer somewhere 70, 80%, 80%. There's no issues, 70% because there's issues, whatever. But that's all that you send over, and you attach that spreadsheet as an attachment. Some people copy and paste that into an email. It's horrible. It condenses this all into an email and people can't read it. Maybe very small, infinite. I mean, very, very like small. You can't read it. And it makes it more difficult for the seller or the potential broker to copy your bids over to see what you'll have your bid. So always attach as a spreadsheet. Unless you're making like one offer, then you just put your loan number and the bid and the address. That small, you can copy that in there. But anything more than one bid, just send a spreadsheet. It's easier to attach it. And that way, if they come back and respond back to your bids, they'll probably paste over the loan number and what the bids came in. It makes it easy for you. Okay. Now, if of course you're submitting a bid on a commercial asset, that's a different story. Usually, commercial note is going to want some sort of LOI, letter of intent, and that's a little bit more official. It's a 1-2 page document, which is basically outlining what you're bidding on, any type of down payment, if they require any earnest money. Sometimes they do, sometimes they don't. But basically, what you're making a bid on, the documents needed, and then your expected close date. Now, if you're making offers and commercial notes, there's a commercial letter of intent letter, one or two of them actually in the manual for the 3-day class. You can take a look at and tweak it a little bit. Commercial notes, I always ask longer than expected close period, because most of the time the sellers on a portfolio of residential notes will tell you, hey, if you close on this, you'll have 3 weeks to 30 days to finish up your due diligence and close it. Sometimes they'll tell you, hey, make your bid highest and best based on what's issued in the columns. Like the 349 assets we had, they had some deficiencies. They talked about missing AOM, lost note affidavit, missing loan file, that kind of stuff. And depending on what that issue is, you would deduct your bid and decrease your bid to keep that in mind. And some people are like, well, how do I submit my bid off of that? Well, that's where you pick up the phone and give me a phone call, because it's a little bit different. If it's missing just an allowance, it's not really a big deal. If it's missing an assignment of mortgage, but it's filed at the county, you see an actual copy of it filed at the county, it's not a big deal. If it's missing the original note, the actual hard file, but it has a scanned copy, that's usually pretty much okay, because you can get a lost note affidavit and be pretty good to go. But that's the thing, is when you're submitting a bid, here's the number thing. Most people are not asking for proof of funds. Okay. So if you're making an offer, and let's just say you're making an offer at 20K on one asset and you've got 25K of your own funds. Okay. I know it's very normal for you to pick the best asset and submit it in. But in a bidding situation like this, you don't know if that one asset is going to be accepted or countered. Okay. So I always say submit in 4 to 5 times, if not more, of what you're making offers on. So if you got 50K or 25K, submit offer 3, 4 offers up to 100,000. That way you've got a backup to a backup to backup. You have a much higher response rate of getting potential bids accepted the more bids you make. And that would be our whole goal when we're submitting offers, is submit as many as we possibly feasibly believe we could take down if we had 30 to 90 days to close on it. Because I can raise capital. If I can get a decent deal in and I'm not afraid to market, not afraid to get out and show and break down deals and stuff like that, and talk about it with my investor database, I'm not scared of doing that. Some of you are scared to do that. You've never had to go out and market. You've never sent an email out to your database. Well, that's going to limit you from making offers, and it's going to limit you dramatically getting offers accepted and ultimately funded. So start that process of reaching out. A very appropriate email or post to your database, if you made 4 offers, is to send out an email with pictures of the 4 properties or the You know, pictures of the property and the four notes. Made offers. Hey, just made an offer on this one in Columbia, South Carolina. Just made this offer on Cleveland, Ohio. You know, find a good picture, and that's the thing. Part of your due diligence, looking at the street views when you right before you submit, is making sure it's not a shack or a shanty. Like I had a guy reach out to me for a note. He's trying to sell in South Carolina. It's kind of rural a little bit, but the only picture I can see is this driveway with the grass, up. Now, I think payoff on it, or it's valued at somewhere around 190. Payoff is like 149, so there's a little bit of equity there. But taxes just got paid, but I can't tell what kind of condition. The recent photo online does not look like it's a lived-in property or decent condition. If the grass is tall and I can't even see it back from the road, that scares the hell out of me. So he's supposed to be sending me some more information. But that's the thing, ladies and gentlemen. I'm not necessarily, I just want a couple questions asked about, okay, when was the last payment? And some of that stuff, he didn't provide that initially. So I'm going to ask, but on a spreadsheet, if you've got last payment or payment stream in the last 12 months payment, which is really nice, you have a pretty good possibility of knowing if that bar is paying or not paying. They're motivated to stay, especially if there's equity or if the taxes are paid. That's a bar that really wants to stay in some sort of fashion. So as long as you're getting it at a price and the equity is value of the property is quite a bit above what payoff is, you're in a very secure position buying the first lien. And so that's what I'm saying is it's make some offers, you get some feedback. If they accept your bids, great, move on to the next level. Then you start paying for BPOs. If you're like, oh my gosh, I got all 4 offers accepted and I can only fund one myself, guess what? This is an opportunity for you to grow beyond your comfort zone and start marketing. All right. Let's see that here. If this is a longer convo, then that's fine. But with commercial debt, it is often only then the borrower will continue to refinance. But if they default, how would you make an offer to assume the note? Okay, we're not assuming the note. We're not talking about something like that. We're talking about buying the note. If you're trying to assume the mortgage by doing like a subject to deal, Anna, is that what you're talking about? You're talking about buying the note, becoming the bank, or are you talking about taking over the loan? Those are two, based on your question, it sounds like you're talking about taking over the loan in a loan payment, like taking over subject to with existing financing in place. If you can answer that, then I can go in a much clearer description of where to go. Or if you want to just come on and ask a question, I can allow you to talk, and then you can answer the question. Let me just do that. I'm going to hit allow you to talk. Anna, are you there? Anyway, we'll see if Anna comes on here or not, or she types in more to the question. But the thing to keep not. Hi, Anna. Can you hear me? I see Anna trying to mute and unmute. Anyway, so if you're planning on taking over the existing financing on a commercial property, then you need to ask that. But most of the time, the bank is going to allow you to just take it over. Most of the time, if it's in default or not performing, they're going to want you to get refinanced of some sort. All right, okay, so how would you make it? Basically, you're making an offer on buying that note, just like you normally would. Hey, this is the balance of it. If it's worth 300, it's worth 3 million. Here's the unpaid balance is 3 million. The value of the property is 4 million or 3.5. We're making an offer at 2.5 based on the fact that they're 6 months or 12 months behind. Okay. Not everybody's going to be able to refinance. That's the biggest thing, is that maybe they need a new operator. Maybe they're willing to take it over. It's a longer question based on what the asset class is and what's going on. How far behind are they? So let me make sure and rephrase this. With commercial debt, if often interest only, then the borrower will continue to refinance. But if they default, how would you make an offer to assume the note on how to buy the note on their note? Well, that's the thing. You're going to ask them what kind of pricing point do they want. If they want par, which is par is the full balance of the note, if it all depends on what the rearages is. If they're 6 or 12 months, and it's worth your time to foreclose or buy the note and then foreclose on the asset, great, you take the property. But what's that difference? It's all about the numbers. You just can't base it off of commercial loan. And you just outline it. And if there is a ton of equity, obviously you're buying below. But if somebody comes to me, we want full payoff on the note, it's not worth me wasting my time. Okay. That's to keep in mind. You got to look at the interest rate. If it's a 12% interest rate and you can buy it and your money's only going to cost you 8%, but it's performing at 12, that might be worth your time. So it all depends on the individual deal more so. But you're going to outline your terms in a letter of intent, send that in, especially to a bank. A bank's usually going to want some sort of letter of intent, how long you need for due diligence, what you're going to need to foreclose, and that kind of stuff. Whereas just a seller is going to often want you to make a bid and then go deeper in. Okay. Hope that answers your question for you, Anna. All right, good. Good stuff. But on the residential side, it's pretty cut and dry. You know, the thing to keep in mind, ladies and gentlemen, is just realize that you're going to need to make offers. You need to make multiple offers. If you do all this due diligence and looking at assets, but you never submit an email with this or a spreadsheet with it attached, you've never made an offer. You got to get off your keister. You got to get off your ass and start really making offers. That's where you learn more than anything else. We can all look at all the crap on the different listing platforms individually and, you know, start doing the due diligence on the side. But if you never actually hit submit, send an email, you're not growing, you're not learning the business. And there's a process that comes with it. Yes, Scott, it's easy for you to say this. You've made thousands of offers, but I'm trying to tell you, it's not as difficult as you make it out to be. I joked with a couple guys that like, you got to quit trying to make love and marry the deal. You're barely on a dating aspect of it. You don't even know if you want to go on a date. So just submit the offer, see if they'd be interested in the bids. Make an offer on 20 bids. You got $250,000 in private capital raise. Make an offer up to $500,000. When an asset manager is taking multiple offers, multiple bids, guess what? Not all your bids are going to get accepted, and you're probably going to kill a few through due diligence. So that's what I really want to harp on with you guys is it's really important for you to get out there, make offers, just get in the process of going through that process. I know it can be stressful. It's pretty easy, okay? I don't know. And is it too late to put in offers on the tape you went over a few weeks ago? I don't know. You'd have to reach out to the seller. I think I went through who that is. Anna, if you want to email me, I think you're direct to them already based on that. You need to reach out to sellers. Usually a week afterwards, like if they wanted bids in on a Thursday and you want to make offers in on Friday, yeah, go ahead and make offers on a Friday. It's going to take them the weekend to get through it. They're not going to probably get an answer back from the direct sellers anyway for a couple of days. So I didn't see a lot of people submit bids in on that stuff because somebody reached out to them a week later and they said, oh yeah, go ahead and submit your bids, which tells me they didn't get a lot of offers in. Okay. So it might be worth your time. Yes. I would reach out who the seller was on that. If you don't know them, shoot me a message. I'd be glad to direct you in that right direction because you're going to need to get signed up and sign their NDA and then go from there. All right. Any other questions, comments, concerns on what's going on in the industry right now? There is here's where I would target to a couple places. If you're okay with these states, the foreclosure report came out last about a week and a half ago, 2 weeks ago. We've been doing some short videos on it. We had an episode talking about all the numbers we learned. One of the underlying things that popped up the most was the 5 cities that had the biggest new foreclosure ratios. Okay, where they're having the most distress right now is the way to look at it. And these are cities with 200,000 plus or more population. Number 1 was University of Clemson area. Columbia, South Carolina was number 1. Number 2 was Spartanburg, South Carolina. So South Carolina is seeing distress. Now, it takes you about a year to foreclose there, but doesn't mean it's a bad necessarily state. I buy in South Carolina all the time, especially if you can find something in default in those 2 bigger cities. Hey, there's plenty of vendors there. Yes, you got to expect to be into that asset probably for a year, if not 2 years. But if you're buying the right price and you get the bar back on track, hey, you're rock and rolling. Number 3 was Lakeland, Florida. God's waiting room, same thing. Number 4 was Atlantic City, New Jersey. Not a big surprise there because of Atlantic City's been distressed for a while, obviously, with the casinos and stuff like that. It's been really distressed since the hurricanes and before that hit a few years back. And then number 5 is Cleveland, Ohio. Sorry, Cleveland Brown fans or Cleveland Cavalier fans, but there's a lot of distress still going on in Cleveland out there as well for it. So if you like those 5 areas, I don't mind Cleveland's. Cleveland, Lakeland, Spartanburg, and Columbia would be 4 out of the 5 that we look at. Not really too excited about Atlantic City, but that's just me. But hey, if you're in Atlantic City or in New Jersey looking for foreclosures, I would start targeting that because the nice benefit about New Jersey is they do have an expedited foreclosure process if it's vacant property. So you start seeing foreclosures on vacant properties, those might be the ones to make some offers on. Okay. But if it's occupied, I wouldn't touch it with a 10-foot pole because it's going to take you 2+ years to foreclose. But it's vacant. That's definitely the play in New Jersey. Buy some vacant and foreclose and flip them. Offer cash or keys, deed and liens to the borrowers since they've already moved out. But making damn sure it's vacant before you make an offer. All righty. Anyway, that's all I've got for you guys. Once again, go through your spreadsheets when you're making the bids. Make it very clean. Make it easy for the asset manager to know what the hell you're bidding on. Label your spreadsheet. Name it Anna's bids, Don's bids, and put a date on it. Loan number. You might, if they title the specific asset or the tape, you might leave the name in what it is, and then your name, like Anna's bids or Don's bids or Scott's bids before the title of it or after, just when you're renaming it so they know what to look for. And then follow up with them. Submit your bids. If you don't get an answer back in 48 hours, just say, hey, one thing I make sure to do, hey, can you reply to this and just let me know that you received it? And we'll go from there. Okay. Any other questions, comments, concerns, ladies and gentlemen? But making bids is just all about making a clean spreadsheet, getting rid of what you're not bidding on, clean, precise, getting it in, and making multiple offers. Don't just settle for the best asset because everybody that's looking is probably looking at the best asset. So stretch yourself. Make 4, 5, 10 times the amount of bids that you were comfortable beginning with. And that's a great way for you to learn how to market and raise capital and really grow yourself as an investor in getting beyond your comfort zone. All right. So go out, take some action, buddy, and we'll see you all at the top.